Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about the ScotiaBank or Bank of Nova Scotia stock. I will discuss their business, their future plans for 2022 and beyond, their dividend, the risk associated with this company, and finally I will provide a detailed stock analysis using my personal discounted future earnings model, and will then provide you with the fair value of this stock depending on your investment goals. The company HQ is located at Halifax, Nova Scotia, and their shares are traded on TSX for almost 81 Canadian dollar at the time of recording this video. They pay an attractive dividend with a starting yield of almost 4.9%, and the market capitalization of the company is around 98 billion Canadian dollar. While Bank of Nova Scotia underperformed the other Canadian banks in the last 5 years by a large margin, it has the lowest price to earnings multiple, the largest dividend yield, and an international exposure compared to other Canadian banks, which makes them a potentially interesting stock in the Canadian financial sector. As such, it is important to know more about their business and see the valuation of their stock at the moment, which is what you will see in this stock analysis video. Before starting the video, I want to emphasize that I'm not a financial advisor. This video is not a financial advice for you to buy, hold, or sell this stock. This is just my personal opinion. You should always do your own research before making any financial decision. With that being said, let's start this video. Bank of Nova Scotia is the 5th largest Canadian company and the 3rd largest Canadian bank in terms of the market capitalization. It is one of the oldest banks in Canada with almost 190 years history, as it started its operation in 1832. Today, the bank operates in 4 segments: the Canadian banking, international banking, global wealth management, and global banking and markets. Bank of Nova Scotia provides banking and products and services in Canada, United States, Mexico, Peru, Chile, Colombia, the Caribbean countries, Central America, and Asia, which gives them a unique international exposure to South America, Asia, and Caribbean countries. Bank of Nova Scotia has over $1.1 trillion assets, around $800 billion in deposits, and a revenue of almost $31 billion annually. They offer various products and services that we all know about, like mortgages, line of credits, credit cards, investment services, wealth management, saving accounts, and registered accounts. 60% of Bank of Nova Scotia assets are located in Canada, while around 68% of their earnings coming from Canada, which means while they have basically a large exposure to international markets, they still earn most of their money from Canadian market. International exposure can be good or bad depending on how things goes in global economy, especially in the countries that Bank of Nova Scotia invested in the coming years. The market obviously didn't like the investment in South America and Caribbean countries in the past couple of years that much, but whether or not this was a wise move by the management, we need time to see the end results in the future. In the recent years, Bank of Nova Scotia was able to grow their deposits by significant amounts in Canadian banking, global banking, and global wealth management, while their international banking sector was almost flat. In terms of the revenue growth, we will see pretty much the same trend here. They see nice growth in Canadian banking and global markets. Particularly, the global wealth management did an amazing job with 23% growth in the last 2 years. However, their international banking sector again did a poor job, and the revenue actually went down by almost 9% in the last 2 years in this sector. This revenue decline has 2 main components and 2 reasons. The first one is we can see that in both Latin America and Caribbean countries, revenue shrinks significantly because of the economical impact of the COVID in these countries. Of course, less travel, less jobs, and lower deposits and banking services in these countries. And also the impact of foreign currency exchange rate on the revenue. This is exactly one of the main reasons that Bank of Nova Scotia underperformed other Canadian banks in the last 5 years. With the ease in COVID restrictions, I believe their international banking sector will improve in the coming years, and hopefully they can reverse the trend here and overall improve their business margins and revenue. Bank of Nova Scotia has planned to expand their business in their core international markets by acquisitions, expansion, and increase its digital presence. In particular, they are aggressively promote their digital services, and they see nice growth in their digital users, mobile users, and self-serve transactions in both Canada and international markets, which means better margins for Bank of Nova Scotia in the future. ScotiaBank has a history of paying out and increasing its dividend year over year. They increased their dividend in 43 of the last 45 years, which is definitely one of the most consistent records for dividend growth among the Canadian companies. They increased their dividend by almost 27% in the last 5 years, which means over 5% year over year increase in their dividend. They also have a low payout ratio, which means they will probably be able to continue to increase this dividend year over year for foreseeable future. Two important factors when assessing the risk of investment in banks are ACL and PCL ratios. PCL assesses the riskiness of loans written by the bank. Risky loans lead to higher PCL ratio. Allowance for credit losses or ACL is also important, which is the amount determined by the management of the banks to absorb expected credit losses. Overall, we can see that PCL and ACL ratios for Bank of Nova Scotia are in healthy levels and PCL on a year-over-year basis decreasing significantly. Canadian banks, all of them, are overall one of the safest investments that you can have. They never had a major issue with their loans and they did not cut their dividends in their history. In the last several decades, even during 2008 financial crisis. They are highly regulated entities, and if someday banks are going underwater, we are all in probably much bigger problem than our investment in the stock market. With that being said, Scotiabank actually managed the risk associated with their banking and investment really well, even compared to its peers. So I would consider them as a very low risk investment. This is my favorite part of the video where I can show you my stock analysis based on the financial data I discussed in the previous parts of the video. I use a discounted future earnings model which basically estimates values of stocks based on projections of their future earnings. So I make some assumptions about the growth of the company in the next 10 years and then discount the future earnings per share into the present value of the stock based on my expected rate of return. So I start with the past 4 quarters adjusted diluted earnings per share of the company, and based on 3 different scenarios, I predict the future earnings of the company in the next 10 years. In the bear case, or the most negative case for the stock, the company can grow only 5% in the short or mid-term, and then the growth will drop to 3% in the long term. It's highly unlikely that Bank of Nova Scotia growth rate becomes so low in the mid-term, but we should always be conservative with our assumptions. I consider a terminal multiple of price to earnings of 9 for this case, which is consistent with historical bear periods for a big bank stock. For normal case, I consider a little bit better growth and a terminal multiple of 11, which is historical average multiple for this stock. For the bull case, or the best possible outcome, I consider the business grow by 14% in the short and mid-term, and then the growth rate drops to 9% in the long term, and I consider a terminal multiple of 13, which is the bull multiple for this company. 14% growth is not out of the realm of possibility for Bank of Nova Scotia if their plans for expansion pans out. And for reference, they actually were able to grow by 14% last quarter compared to the previous quarter. As such, I assign a 50% chance to a normal case, a 30% chance to the bull case, and a 20% chance to the bear case. For growth stocks, I usually expect 15% return, and for dividend stable stocks, I expect 10% return. If I expect a 10% return from this stock, the fair value of Bank of Nova Scotia, the fair value of this company is almost 78 Canadian dollar, which means compared to the current share price of almost $81, the shares are traded at a 3% premium, which means it's basically close to its fair value. It is a buy according to the model. It means if you expect 10% return on your money year over year, this stock is probably going to deliver a return close to 10% year over year in the next 10 years. It's always fun to see what analyst predictions are for a company, and according to Yahoo Finance, the analyst price target for this company is currently at $96 per share for 2022 with a buy rating. It is a hold according to the research team, it is a buy according to CFRA analysts, and Thomson Reuters has a neutral outlook for the company, which all means analysts have mixed feelings between positive and neutral on the performance of the Bank of Nova Scotia in the next year, which is honestly in line with my own expectations. In summary, Bank of Nova Scotia can give you exposure to banking and wealth management in Canada, South America, Caribbean countries, and Asia. The stock is currently traded close to its fair value, and it pays a nice starting yield close to 4.9%, and the stock has a long history of dividend increases. I personally own 3 bank stocks in my portfolio. I own TD Bank for growth and dividend and exposure to Canadian and US economies, Bank of Nova Scotia mainly for dividend but also potential growth and exposure to Canadian and South American economies, and Equitable Group for growth and exposure to alternative form of banking. I believe Bank of Nova Scotia can provide you with consistent dividend increases and in the long run, a nice potential capital appreciation if their bet with investment in international markets becomes a successful one. Overall, I don't think you will lose any money with Bank of Nova Scotia in the long run, and with a high degree of certainty, I can assure you that you will going to make a lot of money with Bank of Nova Scotia in long term. I hope you enjoyed the video, and if you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I see you in the next video. Farewell.